Welcome to 7 Investing Now, a show that teaches you how to take a long-term view on investing by better understanding what's happening in the market now.
Good afternoon, 7 investors, and welcome to the Monday edition of 7 Investing Now. If you wonder why I'm smiling, it's because I had to have a repair done at the condo we're selling, and it took no time and did not require parts, and I thought it was going to cost hundreds of dollars. So I'm happier than usual. My name, of course, is Daniel Brooks Klein. I am the host of the program. In the background laughing, you can hear Max Chasko. Max, when you're selling a home, good news doesn't come often. Usually you think everything is great, and the buyer comes in and says, yeah, you need a new roof. And you go, well, yeah, it's a 3rd floor condo in a 15-story building and there is no roof. And it doesn't matter. You end up spending $15,000. So the fact that I'm getting out of an inspection, basically paying my handyman friend, probably $50 for his time, that to me is absolutely delightful.
That's excellent news. What was the repair? It was, you dodged a bullet.
Yeah, we had a door, like a very heavy sliding, we had floor-to-ceiling windows, and the slider door was behind our couch. There were 2 of them. We didn't use the one behind the couch. The handle wasn't on, and you could not open the door. It physically could not be opened. So I don't know what he did and how he fixed it, but I guess it can now be opened. So I'm guessing no viewer cares about this, so I appreciate your indulgence. We're going to talk about investing mistakes. You shared with us bad advice people regularly give, that they accept as good advice. You shared a ton on Twitter. We're going to talk about those. I'm not sure if Sam Bailey has made graphics out of those, so we might share them, we might not. Then we're going to talk about investing in psychedelics, and our own Max Chasko is going to, on air, take some No, he is not going to do that. We're going to talk about investing in psychedelics, and then we're going to talk to Anirban Mahante about investing his family's money. Investing is something that we don't always talk about openly with our families, but it's something we should talk about more often. But Max Chasko, let's start with your pick for what is the worst investing advice you hear given out regularly. And I'll share mine quickly to give you time to think if you haven't prepped this one. People always talk about taking money off the table. Your winner doubles will take your original investment off. And we're going to talk about this in depth more. But to me, that is the single dumbest thing you could do because you're robbing yourself the ability to make more money. It's all your money. It isn't house money. That is not a thing. But Max Chasko, what is the worst common investing advice you hear that you would love to share with people that they shouldn't be following, of course?
It sounds counterintuitive, but I hate when happens all the time, right? On social media. Someone will have a 15 tweet thread about some stock that they're interested in. And then at the end, as if it's hey, don't listen to me if this goes off the rails, they say, hey, as always, do your own due diligence, do your own research. And yeah, but the problem's most people don't know how to do their own research, or they think following some guy on social media or Reddit or wherever it is, the guy at the barbershop, that's not necessarily research. You need to do a lot more than that. So do your own diligence. I hate when people say that because it's hey, I might be wrong, but don't blame me. It's just too easy.
Yeah, and here's the thing. Be really careful whose advice you follow. So I see a lot of people on Twitter who may be good investors sharing their portfolios, sharing their picks. Now, if that's someone who's well accredited in a space, like say our mutual friend Todd Campbell, you might want to use that as a jumping off point for your own research. But there's a lot of people out there that might be investing, and over the past year, they might have done well. You know who's done well the past year? Everyone. Everyone has done well. And a lot of bad things have happened. My contractor friend who did my work at the house told me that a few years ago, he bought $7,500 worth of Dogecoin, not knowing what it is, forgot about it, and then a few months ago sold it for $80,000. But he fully understands that he did something dumb that happened to pay off. And now he's being really diligent about what he does with that $80,000. He's going to buy a home, and he doesn't own a home. So that's a giant win for him. But again, we've talked about this analogy a lot. If you go to the casino, throw your money down on a roulette wheel and it happens to come up big, it's not because you're good at roulette. It's because you got lucky. You're not going to win again. And look, I don't buy speculative things for the most part. And when you go with what we talk about at 7 Investing, you're getting people whose credentials you could research. You can look up and find out, that I've spent 8 years in this space doing my homework. You can see that Max has an advanced degree and has been in his space on all ends of it. You'll find out that, from a retail point of view, I've run stores. From a warehousing and logistics point of view, I delivered rental scaffolding and had to deal with all the logistics. I've bought commodities. My credentials matter. And the reality is, a lot of the people throwing advice out there, theirs don't. We would love your questions. We would love your comments. Sam, we're going to share Andrew Connolly's comments because at least one person enjoyed my opening comment. Considering I bought a home September 1st, I personally find it extremely relevant. Ha ha. Yeah, we'll do a show on buying a home. Maybe that'll be a podcast at some point because I've bought and sold more homes than any person I know who isn't like a home flipper. And here's the reality. You learn things every time. There's things I now know. Like when I first bought a home, it never occurred to me to run all the sinks and flush all the toilets. And the first house we bought had massive plumbing problems. We actually sold it because eventually the plumbing was gonna collapse. Like didn't have a basement. The plumbing was laminated cardboard tubes underground from the 50s that was eventually just going to go kaput. And to fix it, they would have to dig up my living room. That was more hassle than I wanted.
Dan, my favorite story of yours is the pipe that turned to dust when you touched it.
Oh, that was amazing. So we lived in Simsbury, Connecticut, in a house from the 1800s. It was a beautiful house, but it literally had exterior plumbing. Like you could see the pipes. And one day I just touched a pipe and it just went poof. Now, you can't buy that level of copper pipe anymore, but thankfully, it was not particularly difficult because it was exterior to replace it. So that was not an expensive thing. And a piece of advice I'll give everyone, find a contractor or handyman you like and become actual friends. Like I had my friend who did the work is a legitimate friend, like someone I hang out with, have dinner with, and it saves you a ton of money. Plus you have another friend. That's always a good thing. But we are going to talk things you shared with us on Twitter. We're going to stay in the housing space. Sam, if you have these, you're welcome to share them. If you do not a problem, because I don't think I told you beforehand. Lumber Trader Guy says, always have a house payment. Sam Bailey, way ahead of me as always. Always have a house payment so you can deduct the interest on your taxes. There's a lot of flaws in this. I can explain some flaws, but Max, you don't own a home. If you buy a home, would it be so you can deduct the interest on your taxes?
No, this reminds me of that saying, you're spending dollars and saving pennies kind of thing. I mean, what is it? Like I donate to a certain type of fund and I can write off that on my state taxes, but like I have to donate, $1,000 will save me $30 in taxes. So it's like, what's the point of that?
So when you buy a home, being able to deduct your interest is a nice benefit. The rules have changed about that. I'm not sure it applies to everyone. I think there's a $10,000 limit now. I'm not even sure because you buy a home not as an investment. Now, should you buy a home in an area you expect home prices to collapse? Of course not. You want to be careful to buy something that is likely to retain or gain value, but that's not why you're buying a home. You're buying a home to live in. And when you look at buying a home, you want to look at the delta of what renting what you would like to live in versus owning what you would like to live in costs. And right now, where Max is and where I am, renting the home I'm in right now costs me about $2,500 a month. It cost me $2,495, so almost exactly $25 a month. If I wanted to buy this home in a very inflated market, my mortgage plus HOA would be not a lot more than that, but it'll probably be about like $3,200 a month. Excuse me. That's a pretty significant gap, meaning to make back the money I would gain by owning when I sell, the value would have to climb by about $8,500 a year. That is not necessarily likely. Now, you can also factor out that you get the benefit of living there. So if you really want to live someplace for a long time, you can still do that when the delta is a little bit negative, but you don't want to do it when the numbers really, really don't make sense. And right now, Max, you've been looking a little. The numbers don't make sense, right?
Yeah, in Pittsburgh, we have we're one of the last major cities, if you want to call Pittsburgh a major city, that has like a favorable real estate market, but I mean, a lot of places like here, it does make sense to just rent. I don't know. I mean, you could still, it goes either way. But yeah, we've had a pretty big surge in home prices recently in the last 12 months or so. So I'm going to keep renting, Dan.
Yeah, it's been very insane. We're looking to buy an investment property. and the prices are playing around asking price, a little over, sight unseen within 24 hours. So we're under contract with a buyer who's been approved for a mortgage. We're going to close in a couple of weeks, and we can't even make contingent offers, which normally a contingent offer with our situation would be considered a cash offer, would be considered strong. Now there are so many cash offers, there is no point in us making bids until we have cash in hand. So don't look at your home as an investment unless you truly know real estate or are handy in a way that you can add value to them. Sure, if you redo a home over 3 years while you live there and then can sell it for more money, maybe you'll end up living rent-free and make a profit. That could be beneficial. But as someone who can't change a light bulb or paint a wall, that is not going to work for me. We would love your questions and comments. We see some, we're going to take them as we go. Eugene Ang shared a whole bunch of them. I'm just going to throw one of them out there. Don't buy as market is at all-time highs. Max, recent history has proven this one to be fully not true.
Yeah, and if you zoom out, I mean, the market's kind of always at all-time highs, right? Like if you go back the last decades, I mean, you look at, like we've talked about this with any specific stock. Look at Apple stock. It goes up all the time, or it's had a very good run. So if you look at the historical stock chart, it's hit a lot of all-time highs because every day maybe it hits another all-time high for a good time. So yeah,
it's all-time highs don't matter. If you look at good companies, they're going to hit their all-time highs. And if you wait for a recession to buy, you don't know how much you lost. Now, there might be volatility. So if you buy at an all-time high and then there's some bad news and the market drops by 20%, that only matters if you're a short-term holder. And let's take the question from Pascal shared live that sort of plays into this. Thank you for bringing that up, Sam. Hi, guys. Worst advice. The stock's very cheap, so there is no risk. I talk about this analogy a lot. A day-old bagel is a good deal. You go to the Einstein Brothers or Panera or whatever it is. They're selling day-old bagels. You got people coming over that afternoon. You're going to put out bagels. No problem. Week-old bagels don't have the same value. Month-old bagels don't have any value. So sure, there are stocks I could point out. Max, I'm sure you could find me some biotech stocks that have a really nice website, a pretty good brochure. Maybe the CEO has some history or past, or they've rented some white coats and have a really cool video, and the stock is trading at like 8 cents and I could buy 100,000 shares. Price doesn't equal value. Is that fair to say?
Yeah, I see this a lot actually in biotech. They might fail a clinical trial and the stock gets whacked and everyone's like, wow, look, it's 50% off now. It's trading at this much of cash. And you're like, yeah, it doesn't have a pipeline anymore. Or the next 10 years of clinical development are going to cost hundreds of millions of dollars this company doesn't have. So it's not cheap. And stock price, like you said, doesn't really mean anything in terms of the long-term potential.
Yeah, and that doesn't mean if there's a company you really like and something goes wrong, I'll give the big example of Microsoft and Windows 8. If you fully believed in Microsoft and felt, yep, their stock is trading at depressed prices because Windows 8 failed, and Windows is the cornerstone of the Microsoft empire for the most part. But if you believed they were going to recover, that might be a time to buy more Microsoft. It's not like good companies don't see major share reductions for viable reasons. So if there is a biotech company that has 4 things in the pipeline and one of them fails and that gives its stock price a hit, that doesn't mean you don't buy. But don't buy solely based on price. Again, just because something was worth that doesn't mean it ever has to get back to that. We appreciate your questions and comments. Feel free to keep them coming.
Yeah, and just sticking back with the original comment of don't buy at all-time highs, because I think that's a little more relevant in today's market, right? We've talked about this a lot, but most of the time, what I do is I buy, positions over time. So I kind of accumulate positions. So 1 month it might be, 10% higher, then it might be 25% higher, then it might be 7% lower. And it doesn't matter. Over time, you're trying to build and grow into positions. So don't look at don't be scared of a price that's, seems like it's the highest it's ever been. Now you can overpay for growth. So, you have to kind of think about long-term too, if prices make sense. But I think overall people who are too concerned with pricing are going to miss out more from not being in the market at all.
Yeah, it's here's the thing. The market is a long ride. We're going to take last, so not right now. We're going to take Zufkar's comment as the last one when we seg out, but we're going to get to a few more before that. Bradley Smith says, I hear people say they are long on stocks. One small pullback and they are out. So the misuse of long. Yeah, We have this all the time. We are a buy and hold investing service. We have not yet issued a sell. There are a couple of companies we've had long debates on what it might take to get us to sell. So it's not something we don't think about, but we don't worry about short-term volatility. I own 5 or 6, maybe it's up to 7 of Max's picks. I think it's actually 6. And I think they're all underwater. I think every one of them isn't making money yet. But here's why. Because the reason Max told me to buy them hasn't happened yet. So it's basically like if you're betting on a baseball game and the game hasn't started yet and you panic and sell your bet for less money to somebody else. That does not make sense. The volatility of a stock where the thesis hasn't played out doesn't matter. So if Max is telling me to buy something because he believes they have 3 things in the pipeline, and if any of them hit, it will be a massive success, and my investment will be worth more, there is no reason to let short-term news affect you. I understand it. People ask us, it's probably the thing we get asked most, why this is down X%, should I sell? I promise 7 investors, if you remember, and we truly believe it's time to sell for good reasons or bad reasons. I gave my friend the example of GameStop. I knew people who, before the crazy GameStop trading, owned GameStop because they believed it was a fairly solid company with a good balance sheet that had the potential to double or triple over a few years. When it 80 times because of speculators, that played out their thesis. They sold as fast as they possibly could because they weren't believing GameStop was going to become Apple or some magic company. They believed it had a path to retail viability, and that made it a solid 5-year investment. When it played out, that's when you get out. That is a time we would issue a sell, So let us talk. Wayne Forrest says, dollar cost average as your stock continues to plummet. This is actually not cut and dry. So if your stock is plummeting, but you believe in the stock, I'm actually in favor of continuing to add to the stock. Max, your thoughts there?
Yeah, and this goes back to the last question. You want to orient your thinking around the thesis. So if the stock price is going up or the stock price is going down, if the thesis is intact, then it doesn't matter, right? You still want to maybe buy or hold your position. You don't want to sell and panic if it's going down for no reason. Like Dan said, I think half of my picks are up, half are down. But the nearest term milestone for any of my picks is like still this summer from any pick I've ever made. So even when the ones that are up, there's really no reason they should be up, but it's a market, right? Stocks go up, stocks go down. So I'm not even concerned. And, it takes time to play out some of these, especially the earlier stage biotech companies that I tend to focus on.
John Wayne says, go big or go home. Yes, that is terrible advice. So when I buy into a company, like Max, I build a position over time. When I buy Max's stocks, I usually buy $100 worth, and I add to them, especially when he re-recommends them, but I don't necessarily feel the need to put $10,000 in or $1,000. I basically make them a small part of my portfolio. And if for some reason they come out with news and they quickly change, well, that's great. I'll have made some money. But go big or go home is this idea that you want to have quick returns. So you find one thing and that's a lot like, betting on sports where if I make 3 or 4 bets on games I think I'm going to win, I might hit on 2 of them and come out roughly even or hit on 3 and win some money. If I put all my money in on one game, that's a bad idea. I've done that. Matt Frankel and I have definitely made some big bets, but big bets, I say we're going to bet 300 for the night. We each put 300, into a pool, bet 600 on something, and I'd say in the long run, we're probably slightly ahead, but that's not a great strategy. It's probably more fun from an entertainment point of view to have 2 or 3 games going on, 3 or 4 games going on. That's how I view the stock market. I want a lot of chances at a big prize. Max, your thoughts here?
Yeah, absolutely. I mean, I spread risk across my portfolio, and one of my recommendations, I was even like, all right, I need to start having an anchor position to kind of offset some of the risk from my development stage companies. But yeah, I mean, you shouldn't be all in on, we talked about this before, but allocation of your portfolio is important, and just something you need to think about. What should your largest position be as a percentage of your portfolio, and that's different for everybody, right? If you're young, if you're old, if you're near retirement, so just something that you have to think about as an investor.
We're going to take 2 more comments from the Twitterverse. Then we're going to take Zulfgar's comments. When we get to the excellent interview with Anirban Mahante, that one is taped. And it's really, if you have kids, you should be watching it. If you're thinking about kids, you probably should be watching it. Frankly, even if you're married or in a long-term mixed finances relationship, you should be watching it. But feel free while that's playing to send us your questions, whether we answer them now or save them for later, or just send us your comments. We always love when you are interactive with the program. Even just saying hello can be fabulous. But Irritable Investor, that is a great name. Irritable Investor says always use stop loss orders. Max, you know this might be my most hated piece of common financial advice. Would you care to explain people what happens when you use stop loss orders?
It's really bad. I don't use them at all. I actually don't even really know what they're used. I guess it's to like limit your losses or something, right?
It's to accidentally sell out of a good position
Yeah.
because it went down 10% or whatever the number is.
Do you remember
Yes,
a few
sir, go
years
ahead.
there was like a flash crash and like a lot of people got caught in that with stop loss orders? Like some stock went down like 60% for no reason, or like the whole market maybe, whatever that was. And
A
stop loss.
stock can move 20 or 30% for really dumb reasons, and it can recover very quickly. If you have a stop loss order on Apple, maybe it's set at 10%. Apple goes down 10% multiple times a year, most years. So you end up sold out of Apple, you realize it the next morning, and you go to buy back in, and you're paying maybe you end up paying a premium over what you sold at. Very likely you pay a premium over what you sold at. This is not a great strategy. If you own a company, have the conviction to own that company. It does not make sense to let computers make trades for you. Anand Khatri says, buy some gold as insurance of your portfolio. It doesn't work out in my investing journey. No, gold should be for jewelry and teeth. It should not, and maybe really fancy burgers. I know that was a trend for a while. I am not a fan of hedging with gold. My hedges on my portfolio are my cash position. I try to have a 12-month emergency fund. My other hedge is that I've talked about, we're buying a vacation property. We right now own a very modest vacation property that we own fully. If my world went to hell, I could live there comfortably. I like it there, and I own it fully. When we buy our resort property, we'll be trading up, and I consider that my hedge against the end of the world, where I own a nice place that I could live in. If somehow I had to live there, that would be comfortable. I don't believe in gold because gold is a market that makes no sense. It doesn't trace based on logic. You don't know anything special about gold. Max, I know you're considering a gold grill, but aside from that, do you have any gold?
No, I don't have gold. It's one of the like strangest investment arguments that is out there, right? Like people use that as like a hedge against inflation or this and that. If you look at the long term, I mean, gold and precious metals are like some of the like worst performing assets you could possibly purchase. So like you said, I mean, use cash, or what's a great hedge against inflation? Stocks, like over the long run, right? I mean, that's kind of how it works. Not good advice. Don't buy gold.
Coming up soon, we are going to break out our Grateful Dead shirts and talk investing in psychedelics. But before we do that, we're going to take one last comment on bad investing advice from our friend Zufkar, a regular viewer of the program. We thank you for watching. Initially, I used to get scared looking at CNBC interviews of economics or fund managers who say that the market is going to collapse. Then I subscribed to 7 Investing. Yeah. Just remember, here's part of the reason I'm not regularly on CNBC. I've done some CNBC Asia shots, but I'm not on CNBC because I'm not going to go out there and make a short-term ridiculous prediction. They don't care if you're right. They care that you're good television, because you know what they are at CNBC? They're television. Now, I would point out that I'm more interesting than most of their hosts without having to say anything crazy. But that being said, if I'm a fund manager or an analyst and I want to be regularly on CNBC, I have to predict market collapses or that the price of Bitcoin is going to collapse or triple or whatever it is, because that's what gets you on. That's what gets you. It's not based on a long-term strategy. Part of the reason you joined 7 Investing, and we did this last so I could seg into a bit of a promo, is you joined 7 Investing because we're giving you the 10,000-foot view of the market. We're telling you these are good companies to own for the long term, and here's why. We would love you to join our service, especially with the first of the month coming, because the first of the month, not only is it May Day, it's also when our new picks come out. And I'm really excited about my pick this month. I think I'm going to get a lot of pushback on my pick this month because it is absolutely going to be considered controversial. But if you join 7 Investing for $17 a month or $170 a year, you get access to our new picks. You get access to all our old picks. You also get access to our scorecard, where you can look at every stock we've ever bought and see how it's doing. Now, we're only 13 months old, so that is going to mean more when we're 5 years old, but you can see that we've had some massive winners, but you can also see the couple that haven't done well. And the fact that we haven't issued a sell on the few that haven't done well, we believe those are going to be winners in the long term. And as we said before, it's just that their story has not played out. This is an investing service where sometime viewer of this program when he's not working, and oftentimes listener, one of my high school teachers, Len Kaplan, asked me a question. I think I've talked about this on air. He asked me a question personally in Messenger that he had sent to info@7investing.com, and I answered him. And as I answered him, he apologized and said, I shouldn't take advantage of our personal relationship. And I wrote back and said, no, we do this all the time. Like, you asked a good investing question. You didn't ask me, should I sell this stock because it changed by 3%? You asked me a fundamental question, based on your age, what you should be, what your mindset should be. And as I was answering him, Steve Simich had also sent him an answer. That doesn't happen at bigger investing services. We can take the time. Now, we might take your question and do it on 7 Investing Now. We're not necessarily, and then direct you to it in a response email. We're not necessarily going to have a personal answer to every question, but you will get your question answered if it's one we can answer. Remember, we cannot give personal investing advice. We don't know your situation. None of us are legally allowed to tell you should you buy X stock, but we can certainly help you with mindset and how you think about things. So once again, that is 7investing.com/subscribe. If you sign up for a full year, it's $170. If you join month to month, it is $17. You'd be crazy to not get the full year. That is 2 months free. But Max, we're going to do what we're watching. We're going to do this kind of quickly because I think the interview we have recorded might be 20 plus minutes, and it is a great interview. Are psychedelics a good investment? We actually get asked this all the time. Whenever I mention cannabis, somebody then asks me about psychedelics. And I will point out, I am not a giant investor in cannabis. I just used to do a cannabis show with my good friend, Emily Flippin. And Emily is an expert in cannabis. I cover a handful of companies in that space. And certainly it's a space I know a lot about, but it's not one I'm heavily invested in because I don't believe any of the growers are good investments. Most of the good investments in cannabis are companies that are doing something differentiated. There's only a few of those. And if you join 7 Investing, you will see the one cannabis-related pick we have made, which I believe is going to be a gigantic stock. I believe as much as anything that over the next 5 years, that is going to be a 10-bagger because it is a fundamentally sound company. But Max, psychedelic medicine company MindMed, this is not one you made up, is listing on the NASDAQ this week. You want to give us some background there?
Yeah, so this is already a publicly traded company. So it's not an IPO. It's just moving to the NASDAQ exchange from an OTC exchange. Now, confusingly, it has like 9,000 tickers, Dan. It's also on some tiny stock exchange in Canada. It's traded in Germany. So it's tough to keep track of. But tomorrow, it's going to list on the NASDAQ with the ticker MMED. I hope I got that. Yeah, okay. MMED. It's hard to keep track. But this is a company. Go ahead.
Yeah, what do they do? I don't even really know what a psychedelic is.
Yeah, so this is a company that's going through, rigorous clinical trials to try to get some of these drugs approved to treat anxiety or depressive disorder. So it has a pretty substantial pipeline right now as far as these companies go. They're very early stage, obviously, but it's also acquired some clinical trials from hospitals that are already in progress. So it actually has a couple of trials that will soon be in phase 2 trials. So it's working with psilocybin, LSD, MDMA, DMT, a couple others to treat some of these disorders of the brain, neuroscience indications. So it's pretty interesting. And right now, I think on Friday they announced that they're moving to the NASDAQ on Tuesday. So on Friday, the stock was up like 65%. Today, it's up like 30%. So obviously, there's a lot of excitement and high expectations for this company.
So Max, let me give the warning here. If you are afflicted by one of the issues that they're working on curing, don't self-medicate. This is going to be very specific applications of these drugs that they're figuring out how to use. Don't go out and take LSD. Don't go out and take MDMA. I'm teasing a little bit, but I do understand that these disorders can obviously be very debilitating, and the temptation to kind of jump the line is there. Massive damage could be done. This company is well-founded. Max points out that they had $160 million in the bank. They'll obviously have more ability to raise money being traded on the NASDAQ. Max, is this a legit field of medicine, or is this just kind of wishful thinking?
Yeah, so I actually we have really solid science around psychedelics to treat anxiety and depressive disorders. But the thing to keep in mind is there's a lot of companies in this space. There's just like only a couple that are actually publicly traded right now. But actually with Mind Medicine, Mind Med, I'm actually fairly impressed. I mean, it's founded. It's been has a very methodical approach to development and commercialization. As Dan pointed out, $161 million in cash at the end of March, so it's well funded. It's probably going to need more cash, of course. And I wouldn't be surprised to see it issue stock shortly after it debuts on the NASDAQ to take advantage of its rising stock price. But, the thing to keep in mind, too, if this valuation gets a little crazy, which it's certainly on pace to do in the last couple of trading days, you have to think about what are the long-term returns you're going to get, right? I mean, if this is valued at like $5 billion, by the end of this month or something stupid like that, you do have to consider that you might have to hold on to those shares for a pretty long time to see any return. And you might not ever see a return. So although we have like good scientific evidence that these do work, collecting that data in well-controlled clinical trials is a different animal, right? You have to optimize dosing, you have to manage side effects. But again, the company's been going about it pretty methodically. But and for the most part, the science is kind of out of the company's hands. So it is exciting. It could represent a new way to treat a lot of these disorders, but investors do have to kind of remain grounded if the valuation gets a little silly. Momentum in the stock market is not a durable advantage.
Just because a business is a good idea or doing something that may pay dividends, and I don't mean stock dividends, I mean may pay off, doesn't mean it's investable. And one of the problems you see in the cannabis space is that people love the product. So they kind of believe that it could do well. Here, people are really excited about this because for some reason we're more acceptable of psychedelics than we are maybe of traditional medicine, which sounds a little odd given all the negative LSD stories. Our friend Zufgar says, Dan, you should watch Fear and Loathing in Las Vegas to get an idea. I read Fear and Loathing in Las Vegas. I am not a Hunter Thompson fan, though my college advisor, Professor Doug Brinkley, was a absolute big time, did some of his collected works and things like that. I never really understood it. That being said, that is not the blueprint for how we're going to treat people with psychedelics. So just because something's awesome doesn't make it an awesome investment. Max, you're going to go get a cup of coffee. We are going to play this amazing interview. And Daniel Curran, we will take your question after we come back. But I sat down with our very own Anirban Mahante about how he manages his family's finances. So Sam Bailey, if you want to tee that up now, we would love for you to stick around and watch that. And feel free to share your questions during it. Me once again is our very own Anirban Mahante. Anirban, welcome back to 7 Investing Now.
Welcome, to you as well. You want to keep talking with me, so that's great.
I have a hard time keeping track of what show we're doing. To give people a little peek behind the curtain, we taped the 7 Investing podcast that aired, the one on Apple that came out on Thursday. And we're taping this ostensibly for what I assume is Friday's show, depending how that goes. So if you're seeing this on Friday, but we're going to talk about how you invest your family's money. Before we do that, we should probably talk about the makeup of your family. Do you have 6 wives? Like, I don't know what the rules are in Australia.
Well, so we have a relatively small family. It's just my wife, and we just have 1 daughter. And so we're just investing for that. The other thing is so we're not really just investing in the sense we want to invest not just for our daughter. Just it's not like we have to leave her X amount of money. It's more that we want to be financially independent, and that's and the reason for being financially independent is not that I want to stop working. That's not what it is. It's to have the independence to do what I want to do and what my wife wants to do. Maybe it's like, going out and doing some, non-government, NGO type work, doing some social service, helping the community. Those are things, or just stuff that you want to do without being beholden to, working because you have to work. So that's sort of the context. Yeah, so we have a small family. And we have some relatives and stuff that we want to help, but that's, our relatives are self-sufficient mostly.
Do you have any intermediate goals like paying for college or helping your child with the down payment on a house down the line? Like, I mean, I know those are things. I have a 17-year-old, so those are things I've thought about quite a bit.
Yeah, so my daughter is 12. So by the time we will pay for her college, it depends on where she lands up going. That might cost from a lot to a lot because college these days are very expensive, right? It doesn't matter where you are, actually, whether it's in Australia or America or UK. I have a thing about giving the child exposure to an international education. So, I would like her to actually go somewhere for her education. Like if she's taking, an undergraduate degree somewhere, I'd like actually it to be outside of Australia, largely to get some exposure, learn some different things, be exposed to different colleges, different environments. So, those things would cost money. So there's a bit of that. I would actually really like her to start investing on her own at some point very quickly.
That was going to be my next question, because I know in my family, I handle the finances. My wife and I both work, but I pay the bills, which are almost all automated at this point. There's just one or two that aren't. But I do the investing, and it's sort of based on how we grew up. Like, I grew up in a family that had some money, she didn't. So the fact that we have some money in the bank and, not full financial freedom in that we couldn't not work, but we're not worried if the washing machine breaks. Like, we've gotten to, I often joke, when we first started living together, we had to ask the other person for permission to buy a CD or a book because finances were, she was a grad student, I was making like 28 grand a year. Like, things were very, very tight. And then we sort of got to the point where I bought our vacation home for cash without mentioning it. I mean, she knew I was buying a house, but I didn't specifically show her the one I was buying. So as we're working on buying a nicer vacation home, I have been sending her pictures. That is a mistake you don't make. But is your family involved? Are they aware of sort of what your finances look like?
Yeah. So, so my wife is very busy. So my wife, runs a business, and she's a doctor and has her own practice. So, so we managed that. We have so the way I look at our household finances, I say my wife is the CEO, and I'm the CFO. I would say that she's aware. She knows what we have, what are sort of at a higher level. Just like the CEO would know, okay, this is our, this is how much cash we have, this is how much debt we have, this is how our investments look like, and this is what we are hoping to achieve without going into too much details. If I'm, if I'm doing some investing, she would not. So yeah, so I take the day-to-day actions if required, the management of cash, paying the bills. I do exactly the same thing. I pay all the bills. Whatever is not automated has to be paid. I deal with everything else actually in the household. I deal with, but when it comes to taking major decisions, we tend to take them together. Just because I find my wife's opinion actually extremely valuable, because smart women can come for at different problems in a very different ways, and I find that actually extremely useful. I actually ask even about investment decisions. Like I'll just present a thesis and then say, "What do you think?" and that works really well actually.
We certainly discuss big decisions. I mean, obviously selling our main home, moving to a rental, and buying an investment property that in theory could be someplace we retire to with very low expenses. Not that we intend to do that, but you never know with health or what could go wrong. So we did discuss that, but I will say, and we're going to talk about how you allocate your portfolio. Sorry, stuck on the word there. We're going to be a little bit over allocated in real estate for a little while because we're spending a significant sum of money. But I don't think my wife would have any idea what's in our stock portfolio. And I will say, I know she doesn't know where our stock portfolio is because I have a folder, like I made a, oh my God, what if something happened to Dan? Where is everything kind of document? And even things like, I was aware of the fact that our life insurance expires when our son turns 20, and I needed more anyway. She now makes more money, so she needed more. So I sat her in front of a computer, brought up Lemonade, and said, "Hey, time to add a life insurance policy. Please fill this out." So we do have those discussions, but on an investing point of view, it's just not something she's interested in. I don't think she's ever watched a show I've done or read an article. So it's one of those where she has a PhD, she is an expert in many, many things, but this is the one thing I'm, this and maybe following the NHL are the areas where we don't, which is the National Hockey League, if you're not familiar in Australia. That's generally the areas where she cedes to me. But how do you decide how much is in stocks, how much is in gold doubloons under the bed, or whatever you might be keeping cash in or keeping your money in?
Yeah, so before I answer that, I'm going to double down on one of the things that you think is really, really important. It's having that folder. So we have a box folder, which, what my wife and I have access to, which has actually all the information that, she would need if, for example, something happened to me. And something can happen to someone all the time. That having wills and life insurance is really, really, we actually have income protection as well. Because again, you can get into an accident and that can have an impact on your income. So I think those things are really, really important. Okay, so what housing in Australia real estate in Australia is extremely expensive, right? So in a place like Sydney, for example, you're now pushing probably something like 8x to 10x, maybe even more in terms of disposable income to debt loads. So a typical house, a median house price in Sydney is about $1 million plus. Right, so that's a lot. So we don't have real estate investment outside of one, which is we have got a commercial real estate investment, and commercial real estate is largely because we have an office that we use for business, and therefore that office is an investment that we have made because we need it for investment. Otherwise, outside of that, so our real estate investment is this house and the commercial real estate that we have got, and I do not actually intend to have more than that, and that's plenty. Most of our funds are actually in stocks, largely because, again, I think housing right now is super expensive because housing is a function of interest rates. Interest rates are extremely low, therefore housing has gone up. Almost to me, it looks like this is the peak of that cycle here, and I don't know about the market there, and therefore interest rates are going to go up unless interest rates go negative, which it can. I don't know how housing prices can increase because there's only so much people can borrow. So that's my view on Australian housing. It's not pretty, and so most of our money is invested in stocks. In stocks too, and I guess you were asking me a question there. Were you? I'll pause if.
No, absolutely. Just continue. So most of your money is in stocks, and that's the case with me as well. I mean, my actual cash portfolio is probably bigger than my stock portfolio because I believe in having a very significant emergency fund because I sleep better at night. So at some point between our retirement and our regular investing account, there's probably actually more in stock and other investments, but in our pure investing account, not counting our 401ks, and in my wife's case, whatever the nonprofit version of that is, because she works at nonprofits, I think it's a 50-something B. Our regular investing account is actually slightly smaller than our cash balance because I want to have a year on hand, and we're both lucky enough to do reasonably well. So yeah, how do you approach that? What's your risk tolerance when you're looking at stocks?
I'm actually just like you, Dan, in terms of, I invest in risky stocks, but I'm actually not a very risky person by nature. I'm actually very risk averse in that sense. So in Australia, we have something called an offset account, which is a very interesting concept because we don't get to write off interest that you have, for example, on your home. We can't write it off, but what we can do is we can have an account that sits adjacent to our mortgage account, and that any cash in that basically offsets the interest there. So suppose I've borrowed 500K and I've got 300K in cash, then the interest I would accrue would be only on the 200K. So I tend to carry a significant offset account. And the reason I do that is very simple, because I have in terms of overall asset, our overall asset is largely in stocks, but stocks are volatile. I look at the cash balance as an opportunistic, it's basically dry powder, that if the market is down 30%, I can just take some cash from there and invest in it. I would not feel a pinch because, market is down because I am investing. I like to feel like I'm in control when the market, is going down, because, feeling in control is actually one of the things that empowers you to actually make better investing decisions. So that's how I control my emotions. It doesn't bother me when the investing account is down 30% because I can't invest at that time. So I carry much larger cash balance than I would normally say is wise, because we know that the market goes up over time. So you want to actually be fully invested, but being fully invested means you have to deal with that volatility, which you might not be able to deal with, so the cash. So yeah, keeping at least a year's cash balance is absolutely normal in our household as well.
And fully invested means different things for different people. So I'm not
Exactly.
against, if I see a major opportunity, like I'll take cash from my emergency fund and put it into that opportunity, and then over the next few months or whatever it is, replenish that fund. So I'm not against doing that, but it really has to be a big opportunity, because we have time. Like I'm the oldest person on the team. I think you're next, and we still have 20 something years until we start to break down and maybe can't work as much as we want to. And frankly, with all the science we talk about on 7 Investing now, I'm fairly confident they'll be able to prop us up and hold us together for longer than that. So let's go rapid fire a little bit through. Yeah, I up in his basement, to keep me going here. How many stocks do you own, and are you more invested in the U.S. markets or the rest of the world?
Okay, so I actually don't know the exact count, which might sound like a surprising answer coming from somebody who invests.
No, I don't either.
So I think I'm somewhere between 35 and 38 stocks right now. Most of my investments are actually outside Australia. I have about 1% of my total stock portfolio invested on the ASX. About 99% is actually invested in the US markets. And I have a reason for that, which I can explain if you're interested in.
Oh yeah, absolutely. Go ahead.
Yeah, so one of the things that happens is most people have huge home bias, right? There's huge home bias. Everybody invests in their home market. Now, what that would do though is that does a couple of things. If I invested all my cash or 90% of my cash on the ASX, then I am actually and the ASX is going to hold a lot of those companies, the Australian stock market is going to hold a lot of those companies that are directly tied to the Australian economy. So if something local happens, not only is my housing value going to go down, so is my stock value going to go down, and it's just all correlated. I'm probably going to not have a job and things like that, right? So there's a lot of correlations. So I break that correlation by investing internationally. This does not take away globally correlated events, but if when you have a globally correlated event like the GFC or the coronavirus pandemic, that affects every market, right?
Sure, the upcoming zombie invasion, like whatever it is.
Yeah, if there's a zombie invasion, all the markets are going to struggle, so it doesn't matter. So that's the other thing. The final thing that's very interesting for me is what happens is the US dollar being the global currency. Often what happens is you will notice that when some pandemic hits, the local currency is going to actually take a substantial hit because there is a flight for safety, which means flight to the US dollar, which means if I now think of my asset value in Australian dollars, I'm actually not losing as much. So while my portfolio is down in actually 30%, but in Australian dollar terms, it might actually be down only 10% because the rest of the difference is actually in currency. I made up in currency. So it has weird ways in which it plays out. But I think the biggest reason in my mind is when I invest. So I have a thing which says, invest like the best and invest in the best. And if you want to find the best companies, they tend to be the global companies. And they necessarily don't have to be US companies. You could have the best Indian companies likely to be listed in NASDAQ or NYSE, the best Brazilian company, the top Australian software company Atlassian is actually listed on NASDAQ, right? So the best companies want to access the biggest market. The biggest market happens to be the US equity market at about 55% of global equities. So, and most of the international stock markets would have ADRs, which is basically, American depository receipts. So if there's a big company listed in Hong Kong, they're likely have an ADR in the US. It's just a one-stop in a shop for basically buying the best equity. So that's what I do. I still have a small local exposure.
Final question, and it's one we get asked all the time. When do you sell? And by extension, if a position gets to a certain point, do you trim it just for diversity's sake?
Yeah, that's a great question. So I tend to sell infrequently. And largely for the reason that I would sell if a thesis is broken. So I have this thing, I'd buy slowly So it takes me a while to decide if I'm going to buy. That's okay. I lose some upside on the way in, but when I buy, then I tend to hold. Um, I guess I'd make it, if I buy biotechs, maybe biotechs have a higher chance of going bust than anything else, because there's a lot of things about product pipeline that matters. So I make an exception for biotechs, but I don't invest that much in biotechs anyways. So I sell very, very infrequently. Position sizing, this is a very personal thing. So my largest position is about 30% of the, or maybe 25, 26% of my portfolio. That's Tesla. Most people would not have that much in Tesla, but that has done wonders for us as an investment over the long term. I have sold some, it had become like above 30%, and I'd reduced some. Actually, from where I sold, the stock has gone up further. So it's not that I can time exits. I would say that anything that when it goes above 20% deserves a consideration of whether or not you want to sell. Maybe even 15%. For most people, actually 10% is a pretty large holding. So you really have to decide whether or not you can take a 50% drop in the share price and how you would feel about it given the size, because it's not just percentage, right? 30% can mean different amounts of money for different people, right? If 30% means $5,000 for you, it's probably not, in that sense, it doesn't, if it goes down to 2,500, it probably means that you're just building your portfolio, right? But if 30% means $2 million, and if 50% of that means $1 million is gone, then you might want to reconsider that. So it depends really on there's a lot of, I think, nuance here. But I think a general rule of thumb I'd say is that, I tend to be very, very selective in terms of trimming. I'm all for letting your winners run. I solve this by never adding to a position that has become big.
Yeah,
I would add to something else.
I do the same thing. If something's over 10% of my portfolio, I don't add to it unless there's a spectacular reason to do so. And I will say, one of the things I've learned as a 7 investing lead advisor, and I'd never really thought about this, I generally just bought stock when I had money in my account. And unless something I wanted to buy was abnormally up for a reason I thought was stupid, I would generally just buy it. But because we release our picks to members on the 1st, and we don't buy until the next day if we're going to add to our position or create a position in a stock, sometimes the point where I pick a stock and the point where I'm able to buy it or add to my position, you might see 15% up, 10% down, because we track on a scorecard. The second we lock in a pick, we're all going, boy, I hope that stock goes down, because then we get in at a more favorable position. But as I've been here 6 months, as I look at the scorecard, you start to realize how little that matters. Like, if you believe a company is going to exponentially grow, who cares if you got it at 105 or 102 or 106? It just doesn't matter. And obviously, I build like most people do. I'm not buying my whole position in a company all at once. I don't, so I might buy a share or two, and then a month later buy another couple shares, or whatever it is. It obviously depends on what the stock price is, whether I'm buying 100 shares or 2 shares. Anirban, any last advice on families and investing?
The number one advice I would give to people is invest and get, the sooner you get started, the better you are off, right? I mean, if you just investing is, first 5 years, it seems like, if you're consistently at it, first 5 years seems like nothing is happening, right? Between the year 5 and year 10, you start seeing a difference. It's only year 10 onwards that you start to, oh, this thing really works, because compounding is just like that. It takes, year 10 to 15 is going to be meaningfully different. And then 15 to 20 is going to be substantially meaningful because of the effect of compounding. So I'd say, make time on your side. That's number one. Number two, it's exactly what you said. Just go slow, right? Brokerages are around $0 today. How good is that? I mean, you can slowly build your position. You don't have to worry about commissions. There's so much information. I do exactly that. I buy a few shares now when I start a position, and I slowly add over time. So I think that's the way to go.
And that is advice I share with my son all the time. He's 17 and will probably get his first job at some point soon. And I've already told him he can spend half the money. half of what he makes is getting invested, and I'm going to hopefully teach him the long-term play of, if you start investing at 17 or 18 or wherever it is he starts working, what that can mean when you're not even 50, like when you're 30 and are ready to buy that big expensive house. They're not quite as expensive here as they are in Australia, but they are expensive. And there's obviously a lot of big lifetime things that come up. And if you're invested early, you have the cash, or frankly, you have the asset to back a loan if that's what you need to do. Anirban Mahante, thank you for doing this. We will see you again next week on 7 Investing Now. And we are back, Max Chatsko. Thank you, Anirban. That was a great interview. We will break that out as a standalone piece from this show. So if you look at 7investing.com under research, under articles, we take a lot of the segments from this show and break out just that segment. The video will start from there. The transcript will be just of that. So it's a really easy way to share some of this with your friends. And along the lines of sharing 7 Investing with your friends, Daniel Kern 79 had a great comment if you want to share it, Sam. Do you guys have any 7 Investing gear? I would rock it. I'm wearing a 7 Investing shirt. I have a 7 Investing mug, but I printed these myself. So we don't, but it's not to say we won't. The logistics of having it are really difficult. We mailed out about 30 excess mugs we had. We gave them to like sort of members who asked, and like, I don't know, maybe like 10% of them broke in transit, buying a special mug box and using packing material. So when we figure out the logistics, we would probably do it. I don't know if we do it for profit, if we do it for charity. Haven't decided any of that. Max Chatsko doesn't even have a 7 Investing mug, and I know Max is mad about it before.
Yeah, you're supposed to send me one. I actually donated mine to members. But Dan, we actually are working on swag, and actually I'm supposed to be the one at 7 Investing working on swag, so you can blame me, guys. But maybe by the end of this year, we'll have actually a place online you can go and order T-shirts and mugs and bumper stickers. I don't know, whatever the heck you want. But so stay tuned for that. We will probably have swag in the eventual future.
And we appreciate you spreading the word. Max, when you are here in February, I have 4 mugs. One of them can be yours. I will make sure you take a mug. But of course, you'll have to hand carry it on the plane because mugs are very, very fragile. Or perhaps you're driving here. I'm not even sure if you've even thought of those logistics yet. But Sam Bailey, we are running out of time. It is time to hit our finisher. This is a question that surprised me. Consumer prices are rising on goods like diapers, soda, paper towels, and peanut butter. Are you concerned? About 45% of you said yes. 29% said no. 26.5% fell into the camp where I fall, and that's I haven't noticed. Max, this is one where if you're buying diapers, which are expensive in the first place, and you obviously can't go without, like if I get to the store and Coca-Cola feels expensive to me, I can just be like, I'll drink water this month. I don't know, you've never had a baby, but going without diapers would be a really, really bad choice. So consumer prices are going to rise, but I actually think this is going to have selective impact. I think it's much like the paper towel shortage, that there will be certain things where it really is noticeable and it's high, but I don't think it's mostly going to be noticeable. I'll give you the last word here.
Yeah, I mean, I guess it depends. I mean, we can expect some inflation like immediately, right, during the recovery. Is this sustainable? Does it last? Does it maybe take a breather later at the end of the year? I don't know. I mean, I've been wondering too, like we talk about, is there a bubble, right, in the stock market or this or that? I actually wonder, there is a lot of liquidity out there. Maybe that's the bubble, how much liquidity there is. That's driving up prices in, the stock market or real estate, consumer prices, diapers, right? Who knows? Maybe it's liquidity that's the issue, Dan.
Yeah, there's going to be weird shortages. Like if you're going to buy a gas grill, I'd buy it now because people are going to be having friends over. If you're going to buy that hat that you put 2 beer cans in, there might be a shortage of those because we're going to be in a celebratory party mood. Big bags of pretzels. Like who knows? Like there are going to be weird shortages, but I don't think there's going to be some fundamental change where like all of a sudden for the long term, milk costs 80% more. Now, again, there's going to be short-term demand. There's going to be changes. There is a massive pent-up demand to do fun things. So when it's okay to have your friends over to do stuff, when everybody is vaccinated, I think all of us on the 7 Investing team, I might be wrong, and I haven't asked everyone, so this is my supposition. I think we've all had at least the first shot of the vaccine. Not everyone talks about that publicly, so I'm not entirely sure. But that being said, that makes it more likely we could get together, and we get together, there will be a shortage of scotch or bourbon in the market we are getting together in. I am teasing a little bit, but we thank you for watching this episode of 7 Investing Now. If you'd like to get a hold of us, it is very easy. You can send us an email at info@7investing.com. You can message us on Twitter. We are very active on Twitter. That is at 7Investing. We appreciate you watching. We hope you tell your friends about the only free live show on television-ish, on the internet, on wherever we air, downloadable as a podcast that focuses on long-term investing. We are going to give you what you need to know to not do dumb things. And there are a lot of dumb things you could do in the market. Sam Bailey behind the glass, thank you. Max Chasko, thank you. All of you watching, we appreciate it. Tell your friends. I am Dan Klein. I'll be back on Wednesday. Thank you.